Welcome you to the webinar, From Crisis to Fraud, Smoothing Income and Creative Accounting. It is my pleasure to introduce to you Francisco Segura, our audit partner, who has over 25 years of experience in the areas of auditing, compliance, financial accounting, as well as dealing with matters related to financial statement auditing. So please feel free to send your questions during the transmission. Our expert will answer them in the Q&A session at the end of the webinar. So please, Francisco, I leave it to you.
Thank you, Ali. And as Professor Amaro said, mankind is capable of the best in the world. That means that even when our minds are capable of creating great things, great art, etc., also have the capability to create great frauds, evil, and damage the others.
Alrighty, well, let's start with the agenda. Financial crisis and the great catastrophes, innovation versus regulation, fraud and those who perpetrate them, and fraud warning signs. So let's go ahead. We're going to start off with a very interesting timeline with the most important historical events regarding financial matters. Let's start off with 1866, Overend and Gurney and Company's bargains. In 1930, the Great Depression. In 1980, default on payments by several developing countries. 1990, Japan and the Nordic countries. 1997, the Asian crisis. 2000, the dot-com crash. And 2007, collapse of the housing market in the United States. We're going to go into detail, so please, Francisco, go ahead.
As you mentioned, Ali, there are several dates along the human history that has developed crises in terms of economy, and it seems that each one has been worse than the others and have multifactorial issues. For the period of 1866 to 1890, we have a lot of crises all over the world, probably not as known as we will think. But for example, in England, there were small financial institutions that make a lender lends to the people and entrepreneurs. When these lenders stop the possibility to lend, it was claimed by the small companies to the intervention of the Central Bank of England to take the roles as the last resort for the lenders. So it became the first intervention of the central bank in the economy. After that, in 1929, the Black Thursday in the United States, that was an event caused the American as well as the global economy to collapse, which contributed to the Great Depression of 1930s. And we shall remember that within this crisis, the economy falls 13% and recover after the Second World War, when this necessity of employees to produce arms for the war reactivate the economy. Later, in 1985, there were small institutions dedicated to saving a loan to the public, and at a certain point, they stopped the loans and had to recur to the bank to prevent a collapse of the economy. In October 1987, and with the incipience of the internet and the speed of the communications all over the world, we can say that is probably the most important date when a crisis becomes worldwide based on the information systems. In that year, the computerized system for buy and sell stocks in the New York Stock Exchange was the crisis, and the Dow Jones Industrial Average fell 22%, having this effect also in the Japanese and European stock exchanges. Later, in 1998, there was a collapse in the long-term capital market, and it was push with the stop of the markets of Russia and Brazil in 1998 that claimed for more resources and stop paying the debts. Probably the most known by now is the dot-com crash. It happened in 2000 when the initial development of companies like AOL and Amazon that were like the black horse in the market with new forms to trade with no basis, with no physical warehouses, and developed expectations of the public for greater gains. But when the results became public, it was developed that the actual result was lost because of the startup of the entity. That collapsed the bubble of dot-com companies. But further than that, it comes out with new crisis and fraud was discovered. So what we have learned from this is that due to the globalization, the frequency and the spreading of the financial crisis has a more wide world, but not necessarily as severe as we will think. And also that the intervention from central banks is more effective and containing them than actions that are taken too late. Quite often, the regulator has kept out with the pace of the financial innovations that could track and new crises, and as a response, has required more regulations, more information to the market participants.
Excellent. Let's start off with fraud. There are main types of fraud in the accounting. Regarding Association of Certified Fraud Examiners, we're going to start off with asset theft, corruption, and accounting fraud. So let's take a leap into accounting fraud.
Thank you, Ali. Yeah, I think for all the theft and corruption is on our minds that we can suffer in our companies, but few of us know that about the accounting fraud. And this accounting fraud consists of presenting a different image than the actual that the company or the organization has, with the intention to support or mislead the decision of the investors or the owners or the markets to sustain our company. So we have legal accounting frauds that has to do with creative accounting or the lack of proper regulatory in terms of new transactions, new kind of business, and illegal practices that are those that prevail from legislation, like, for example, hiding sales or expenses, or recording fictitious assets, or not accounting for debts. Other name for accounting fraud could be creative accounting earnings, aggressive accounting, earnings manipulation, rich accounting, but all of these has to do with the alteration of the year in which the transaction is carried out, the allocation of expenses or incomes for different periods, and places in which the entity is classified. For example, in times of crisis, a company might be suffering for getting financing, so they will try to present a better financial situation that supports the facts that the company is a good starting point to pay debt, or can take advantage that everyone is expecting to have poor results to hide revenues that serves to come out after the crisis with better shape for the investors. Other name for accounting also has to do with window dressing. When you when you want to present your better face to be acquired or to have a loan, what is called also big bad and cocky yard, that is supply management or impressive management. And it has to do with detailing the most benefit and the best results and taking in the lower size the bad results of the problems that the company might be facing.
All right. So we have talked about the crisis and the type of accounting fraud. Now it would be great to understand the historical impact on humanity. So let's take a look into that.
The fraud is sanctioned under the Egypt, Babylonian, and Indians when there was a control system of entry of grains in these silos of warehouses of the emperors, and it was audited in all ways. Indeed, here is where the term audit comes from the Latin audire, that is here. Accounting fraud was committed when the official and transcribers sent from the temple kept of the part of the taxes after modifying their, that is, they declared different figures than the actual and took the difference for them. The reference comes in 1602 with the world trade in the development of the Indies, the recent discovery of America's continent, and the new routes to commerce worldwide. So these big companies that required investment and there was major investors and minor investors, and then the minor investors tends to manipulate the figures to share less dividends to those that have not the power. And then what happened here is that those minorities claim to the governments for more strict form requirements for a third share of benefits. Then the origin of that makes the origin of international markets also when the Scottish and British capitalism invested into America, they sent auditors or persons that reviewed the results of the companies where they were investing. And of course, in 1930, the listed company in the United States obligated to disclose accounting reports and submit it for external audit. It then support the idea of the SEC and the render of audited accounts. But in that case, the effects of the Great Depression that ended in 1941, the SEC indicated the obligation of auditors to include confirmation of balances that, for example, was not done in the past as part of the audit procedures. And another success event in 1968 that even when the financial accounts were fairly presented by Barclays Constructions, right after the report was released, there was also discovered that there were certain events that caused that the assets that had been reported lost the value. So then the SEC required the auditors to review the period from the year end to the time the report was released. And of course, we talk about the crisis or the bull crash of the dot-com companies, and what comes out from that was the error fraud. That was not the only one. Also had the WorldCom, Global Crossing, Tyco, Sears, Parmalat, and they were back to the auditors and said, well, what happened? What were the auditors doing with these companies? How is it possible that they committed fraud? And in that time, in 2002, Harry Pitt, who was the president of the SEC, stated that accounting irregularities have been hidden, balances have been overstated in terms of regulation and oversight of the accounts. Everything has failed because the auditors fail in the procedures, the board of directors fail in oversight, the performance of the entities, the governments and regulators fail to discover those facts that lead to the crisis of 2000 and the frauds perpetrated by Enron and other companies. The result was the Act Sarbanes-Oxley of 2002, where the United States modified its commercial laws. It comes and it was the born date of the PCAOB, that is the auditor of auditors, with new quality rules, with new requirements, and also the new adoption of the international financial standards with most of the public entities, primarily in the European Union. After that, in 2008, the housing bubble, and it's probably the second Great Depression all over the world, with the bankruptcy of Lehman Brothers and reformulation of financial statement for public companies between 2006 and 2008 and 9, sorry. That developed low quality of rating of assets that also involve the rating entities, the incorrect estimate of income that leads to new rules for revenue recognition and the deficiencies in risk information. The most important causes of observation from PCAOB to the audit report has to do with three items: internal control, audit of estimates, and sampling for the testing of audit performed. So new rules comes again to the work of the public entities.
Excellent. Wow. So learning about all of these historical events that we just shared, let's embrace this quote. Would you lie to your doctor? I mean, this is very important. Francisco, what is your opinion on this?
Well, I think that in terms of the economy and in terms of the reporting entities, there's a clear difference in the expectations and what the auditors do, the regulators require, and the user respects. For example, in terms of auditing, what the auditors do is express an opinion on the fairness according to a financial framework. And it does not necessarily reflect the reality of the entity, but the correct of the report based on a framework. What the regulators expect is that based on that framework and the rules that have been issued, the auditors and the preparers of the financial information follow the guidance, perform ethically, and report the figures as it corresponds to the entity. And unfortunately, what users expect is more than that. Users usually expect that the auditor, the regulators, prevail frauds, prevail crises, which is not necessarily what happens in our markets. The faithful of the image of the asset and liabilities then, according to the audit, is the adherence to the accounting standard. And the PCAOB controls those quality for the public entity audit. But you have also think on fees versus quality, the pressure on the economy and the crisis and the situation of our companies tries to lower the fees of and expenses that the company has, including the auditor fees. And this sometimes might affect the audit quality because then the budgets are not enough to cover or perform all the procedures required to prevent and properly perform an exam of the financial accounts. The independence of your auditors, or the independence, and I said the conflict of interest among your suppliers, your vendors, your customers has also certain effect on the markets. The confidence that you have on your employees and top management and the rating of agencies has to do something also with the expectations and the evaluation of the information from the markets. Then, as the regulators ask for more, in every period of economic recession, new regulations comes out. For example, in terms of financial information, we have to consider that it has limitations in terms of acquisition costs. The international accounting difference from US GAAP to IFRS to local GAAPs also has to do with this comparison of the performance of an entity in the market, how the companies are valued or accounting for intangibles, for example, the channels of distribution, etc., and the regulatory complexity. For example, in the last 5 years, we have 4 or 3 new rules in terms of revenue recognition, lease arrangements, now the bitcoins and these cryptocurrencies that might affect the result that is being reported. And as they are new, there's no the clarity and the concepts of how to treat them, even when there are rules established or being developed to do that. For example, in terms of fraud, the International Standards on Auditing 240, accounting frauds, requires the auditors to pay attention to manipulation, falsification, or alteration of accounting records, and also requires to evaluate the misrepresentation or intentional omission of events or other significant information from the financial statement. That is, not only the full financial statement, but also what the companies are disclosing in the financial statement footnotes. Then, the intentional misapplication of accounting principles. For example, one company that pays taxes in, let's say, Mexico, where they are entitled to account for seniority premium by force, by local law, or by local audit accounting standards, while for international financial standards, they are not required to account for it because it's a contingent liability. That causes difference and causes different results for the payment of taxes.
All right, well then let's move on to the perpetrators. Who does these type of frauds?
Well, that's a very interesting question because when you think of the fraudster, you might think probably on the top management and the director, the accountant, the banker, but not necessarily every person. The perpetrator might be also an organization. And you shall remember that we have broadly understand the triangle of fraud that has to do with motivation or the need or pressure that encourages interest in defrauding, the opportunity that the person or the organization has to defraud, and there's a rationalization that the fraudster has. The self-justifications that allows me to commit a fraud. But additional to that, Orwell Matt in his book, Entities That Lie, mentioned the profile of fraudsters that have to do with the capability, the arrogance, and the intentions of the fraudster.
Well, let's take a minute and talk in detail about the profile fraudster. Can you explain your comments about that one, please?
Yeah, I said it could be the person or the organization, and in both cases there is an intent to deceive. It is often both are in response to the company financial difficulties or the personal financial difficulties, so loan and mortgage, kids in school, etc. That leads to accounting manipulation that distort the financial statements. But the key and the common consequence of this is that damage the confidence in the system and impede the progress of the economy and the financial markets.
Okay. I would just like to invite the audience, please send all of your questions that you have. We would be happy to answer them in the Q&A session, so just please go ahead and send them through the chat. And let's move on to this one. How is it done? Well, recording fictitious sales in one of the most widespread accounting frauds, transactions made through tax havens, lack of regulation for preparing and reporting financial information. Well, while this is getting done, well, you're increasing or reducing assets, or you're increasing or reducing debt, or you're increasing and reducing benefits. So let's talk a little bit more about these three items.
Yeah, one of the problems that the company is facing is that management is asking, don't tell me how not to do that, but tell me how can I do this. That is, I know that I cannot do, or I'm not certain I can do certain transactions, but I need the assessment on how can I do that to get the benefits of the result that I want. Not necessarily the fair results, but the results that better shape or better present my entity and the results of the management.
Correct.
That leaves personal red flags that before the fraud is committed, again, related to the motivation and opportunity associated with personal warnings, like if you put an aggressive plan of bonuses to your management, or you have a poor mechanism of control, which usually goes well with familiar enterprises. And after the fraud has been committed, there are also signs that you should be aware of and can be reflected in the quantitative information of your financial statements. Also, you must consider the anonymous reporting. And I will give you some statistics according to the ACFE. And this has to do that only 42% of the frauds come from anonymous tips. These hotlines that some companies have established have really a tool to discover frauds. 16% of control from senior management, and in terms of audit, 40% of the frauds have been discovered by internal audit and only 3% by external auditors. Coincidence? Probably not. What is true is that 25% of the frauds have been discovered by coincidence. It is when the person that committed the fraud has to leave due to holidays, illness, or sick. That's where someone else comes in and discovers that the fraud has happened.
Alrighty, well, that is a very interesting topic. So we're going to talk about the warning signs before the fraud. Very important.
Yeah. In terms of fraud, as said, we have personal situations, and the key has to do with motivation and opportunity. The motivation has to do with significant dependencies, financial situation of the person, business with very aggressive objectives. The most I pressure my employees to get the results, the more risk I am having for them to find a mechanism to get to those metrics. The opportunity, the strong relationship with suppliers and vendors, said, friend to make arrangement outside the organization to benefit a customer or a vendor against the others. So in this case, the competitor of different purchase orders might be a good practice. But most than that, the seniority that creates trust, and that trust creates the lack of control over my management, is a key factor of fraud. In terms of rationalization, and I will turn back to the crisis, people who consider themselves to be poorly paid is a good motivation. So how are we developing this tendency in our people? Are we retributing them, or are we getting the lower salaries because I don't want to pay more than is fair to my employees? And secondly, and as I mentioned before, the personal profile. And usually we attempt to the history of management. This we as auditors and the accounting firms perform a process that is called as know your client. So how well do you know the management you're hiring? Which are their antecedents? And you must think that, like the scorpions, they are never alone. There's always one person that thinks of the fraud, and one person that executes, and one person that covers what needs to be covered in fraud. Also, the lifestyle that does not correspond to the salary that we're paying, probably this person has another business or has these relationships with clients or vendors or companies that gets more revenues and more income that we are actually paying. And the self-centered authorizations, how well are our policy of authorization of expenses or benefits in your companies? And one sentence that I read and I love it is drunk with success. That is what happened with Parmalat, for example. It was a management, a senior management plenty of success that want to say the word, hey, I'm success, I'm having very good results, and try and covering these results become to fraudulent practices. But also, in the organization structure might have some warnings of fraud. For example, in terms of difficulties to cover covenants with your loans, opinion of the analyst, or in terms of transaction of purchase or merge with other companies, signs like when your managers are going to leave the company soon, companies to be sold, as said, lowering the payment of taxes or conflict between shareholders can be some organizational structure opportunities to fraud. Lack of monitoring, as said, the audit and monitoring function, not necessarily audit, but certainly someone that oversight your organization from an independent perspective to operations and finance reporting functions is important, either internal or external. And if you are being audited, warnings like the delay of the process of audits, not adequate segregation of duties, be aware of whistleblowers in your hotlines could be a good warning of what's going on with your organization. In terms of reasoning for an organization could be the necessity of financing the operation to continue as a going concern. For example, in these times of crisis, who will lend the money when we all know that the market is depressed? And in terms of the profile, how are you doing against your competitors, the sectors where you are performing business? Are they related or are family-owned small or medium entities?
Excellent. Well, that is all very interesting. So now let's talk about the fraud clues. Let's stay alert.
Well, after the fraud has been committed, there are also some clues that you can follow. For example, hacking of employees, frequent changes in regular devices. If they perform ethically, usually will not allow you or will leave the account if they discover that the things are not doing well. Tensions or conflict with your auditors, a company that constantly change the audit team could be an indicator of fraud, or that the things are not going as well as the management would like to think. The existence or the history of tax penalties, delay on payment of taxes, the relationships between the company's employees and the auditors, which I'm not saying that this is necessarily a cause of fraud or an alert of fraud, but could be a warning. So the big question is, do the numbers lie? I have always heard that the numbers always say the truth, that there's nothing more cold than a number to understand the figure. But the numbers are not so clear when they are taken on a standalone basis. You need also always to have a point of comparison. For example, how many sales points do you have and how are they performing on your sales? If there's an increase on your sales with your square meters of a point of sales is the same, how are you doing to increase those sales? If your cost, the square meter for manufacturing, is not being reduced, how are you reducing your cost of sales or cost of manufacturing to improve your margins? Or how well are performing the number of employees to your costs and your revenues?
All right, so now let's talk about auditor. Now that we understand the type of frauds and the warning signs, as an auditor, we are not here just to find a fraud, like in a crime scene. In reality, is to work together with the company's internal audit team and support our clients with new strategies and have a better control overall. Identifying these signs and warnings, you will be able to act and prevent at the right time. So the importance here is what alert signs do you have to look out for in your financial statements? Please, Francisco, let us know about that.
Yes, except the ISA 240 requires the auditors to be alerted from. So your external auditors have the knowledge of the industry and the performance of different entities in your market or in your country or in your region. Also, they perform analytical reviews that might help you to understand the performance of your entity. For example, in terms of sales of assets recorded for loan to partners, or complex transactions with related companies could be indicators of fraud. Also, excess accounting records at year-end or significant errors or errors and observations that have not been corrected by management in terms of internal control might be indicators or something is going wrong with your company. But it's not only the balance sheet that reflects the problems or probable fraud in the organization. You have to look also to the income statements and look for inconsistencies between sales and collections. I mean, if you are increasing your sales, but your accounts receivable are increasing significantly, you might question if those sales are real or not. If the company is constantly changing policy for capitalizing expenses, these R&D expenses are properly accounted in the balance sheet of the income statement, or the reduction in orders as a decline in sales, what is going on with your business on a day-to-day basis? Also, recording expenses and losses in change to reserve. One rule that you must follow is that if you account for an accrual or a reserve, you must only use that reserve for what it was being created. And if you don't use it, you release against the same line in the P&L instead of charging or applying other expenses for not hitting the income statement and affect the results reported. Also, the questionable or sales transaction with related parties out of the normal business of the entity, sales and repurchase of assets in terms of sale and leaseback. What are you doing? With who are you doing that? Who was the benefit or who was the purchaser of the asset? And how are you doing with the impairment of assets? Could be those reserves that can serve to account or defer the benefits from one year to other. Besides that, the other indicators that you must be aware of has to do with the cash flow. The cash flow can be measured primarily on the cash you have in the bank account, but also how is your income statement performing? How is your EBITDA versus the result from operating activities in your cash flow financial statements? And in terms of ratios, how is your performance on liquidity, indebtedness, in terms of the business cycle, collection, payment, inventory, compared to prior years and to your peers and competitors in the same industry and markets? Are indicators that you might follow to be aware of accounting frauds.
Excellent. Well, thank you very much, Francisco, for sharing this valuable information. Before continuing with the Q&A session, I would like to ask the audience the following question. In the other hand, we would like to invite you to contact us through the chat. Again, please send all of your questions. We will be very happy in answering them. Thank you for participating and answering the survey. Now we will continue with the Q&A session. So let's go ahead and start off with the first question. Are you ready, Francisco?
Yes.
Okay. How can we strengthen our control structure to prevent fraud?
Well, I will suggest establish a good code of ethics and conduct. Secondly, review your process in terms of how is it done, the controls for authorization and segregation of duties, and perform independent reviews from time to time to the process, and primarily key process related to obviously cash control, but also the purchase process, the sales process that might reflect some weak on your internal control. Review how often are you rotating your personnel, and review also or perform from time to time an external audit or implement an internal audit program.
Okay, excellent. So just stay alert with that. Second question that we have here, what communication should I have from my audit team to prevent a fraud?
Well, that's a very, very good question. First of all, the fraud is a topic that is not carried out in only one stage of your audit. You must talk about in any phase from the planning and the execution and the conclusion of the audit. From the planning, when you have this kickoff meeting with your auditors, ask if they are concerned of any area or comment to them what are your concerns in terms of revenues, in terms of the performance of your personnel, in terms of the integrity of your personnel. As you said, Ali, feel like you're with your doctor. They will help you. Exactly. So it's important to keep a clear communication with them. Ask also to be comment with the key internal control deficiencies that they might face. An audit will focus on design and operation of control.
Okay.
So in the performance of an audit, we must understand the way you are doing the transaction, the way you are doing the business, and how this business, or these transactions and this business represent risk for the information that you're reporting. So it's important for you to have this letter of recommendation from them and discuss the key risks that they see in your business, and get constant information with top management, not only accounting, but also plant management or stockholders or owners of the entity.
Excellent, excellent. Very, very nice answer. This actually leads me to another one, very interesting. So do all related party transactions can be seen as a fraudulent activity?
No, I won't say that. But there are certain transactions that when they come out of the normal business course can become not fraudulent, but complex in the treatment. For example, if you try to implement a new royalty payment or management fee or something that you had not in the past, could be quite difficult to implement in terms of all what is needed, and could be also treated or seen as fraud by tax authorities, for example. So it's not, in this case, it could be legal transactions not properly treated that can lead to an accounting fraud, not necessarily the loss of assets.
Okay. Excellent. Okay, now I'm getting a better picture overall. So let's go ahead and answer another one. In small organizations, what can we do to improve controls without increasing costs or number of employees in the company?
Well, probably, and it depends on the size of the entity. A full audit might not be the answer, but yes, a review from an outside party. The auditing standards and attestation standards lead us to different kind of reviews and reports that we can offer to your entity. For example, there are reviews that are performed on terms of questionnaire or indicators of fraud, like ratios, like special transactions, and the result of those reports has not that it has extended nowadays with not the same volume and could give you a fair understanding of possible risk. I wouldn't say that your company are free of risk or present fairly your financial statements, but at least that an external advisor has not seen something that leads to a misinterpretation or misaccounting or misreporting of your financial statements. Those could be a way. The other, as said before, is to implement internal program that you can manage along the year with the different classes of transactions or areas of your business that you might be interested.
Excellent. Okay. I appreciate answering all of these questions, Francisco. We're going to do just one more. And I would just like to say to the audience that if there was a question that was still not answered, please feel free to contact us and send your questions. We would personally answer them through email and contact you so we can help you with all of the doubts that you may have or troubles you're going through in your company. So last question here, Francisco, within the organization, what are the levels of supervision they must have to prevent a fraud? The good one.
It's a very good one because it depends on the size of the organization.
Mm-hmm.
But I think the oversight board, probably the function of your commissar in the case of the Mexican entities, for example, or how your top management is asking questions on the reports that they are receiving and the frequency they are reporting. For example, if you have an accountant, do you have a controller or a CFO or something that has the skills to question the numbers they are receiving? It's common that in familiar, for example, in familiar entities or small business, that the owner doesn't have the expertise to question the financial function. And then I will suggest to have an advisor that support them with this kind of reviews.
Wonderful. Very nice answer. Alrighty, well, basically we have reached the end of the webinar. And Javen Rio, helping companies do business in Latin America, appreciates your interest and remains at your service for further questions. Like I said, please send them and we'll be happy to contact you. And well, we appreciate you welcoming us and have a really good day. Francisco, thank you so much.
Thank you, Ali, and thank you to everybody to assist our chat today.
Have a great day.